Shannon, you joining the Zoom meeting or no? I just emailed you a link. I'm pretty sure that's it. Hi, Rebecca. It was a pleasure dealing with you both. Thank you for doing business with me. Much appreciated. Take care.
Yes, Richard,
Hey, Kathy, I'm logged into Zoom. Are you logged in downstairs?
I am.
Well, why, I must have a different link then because I don't see anybody on there.
Oh, I just pulled it up. I didn't. You can't see me here. I can.
Yeah, log in. I want to
I
make sure.
can look it up.
I do.
Okay.
Hey, Zipa. Well, I gotta show it tomorrow. All right.
That's Richard.
Hey, I emailed the same link to Chris that I have, but she says it's not it. I still only see me on here. Can you email me and Chris Munson the link?
Yeah.
Okay.
Okay, bye.
Unit or just.
We're waiting on Wayne Weaver. I hope he has the same Zoom link we have. Can you guys hear me?
Yes.
Okay. Let me try calling Wayne again. And Chris Munson, we're waiting on Chris Munson. Chris, are you there? What the shit?
Hello. Okay. No. Okay, you're welcome, bye.
Wayne? I'm not sure if we've got Chris on with us. I don't see her name up here.
Yeah, can we text her and
Oh, she said she didn't have the link. I asked the secretary to send her a link. Let me call her real quick.
yeah, let's see if we can.
Oh,
Chris, you don't have the link yet?
no,
Oh,
Wayne, do you have the link you can email her?
yeah, let me see if I can do it.
Her email is Chris, CHRIS _ Munson, MUNSON 78 at yahoo.com.
Okay.
She really doesn't need the link if she can put in the meeting ID if she opens up the Zoom app. And you can put in a meeting ID to join the meeting and then put in the passcode REA. You don't need a link then.
I don't have the code.
She texted to us this morning, so you could just forward that text to Chris.
yeah, but if you forward the text to me, I'm not gonna get it because it's gonna go to my cell phone.
Yeah, she wants the link emailed to her, Wayne.
All right, she should have it. So,
Okay, Chris, you should have it.
Oh, there it is. Okay.
And she's logging in. Hey, guys,
Okay.
Alright.
while Chris is logging in, I just want to introduce the Ryan Redinger, who joined us last week. He has his Pennsylvania license, and he has also New York license. But anyways, where do you live, Ryan? Down by Grove City, you said?
I live in Clarion, Pennsylvania.
Clarion, okay. So if you got anybody for referrals down that way, he's down there in PA. Just thought I'd introduce him.
Yeah, nice. Welcome, Ryan.
Thank you. Nice to meet all of you.
And we were talking about what Chris is gonna come on and tell us about how to save taxes on FICA when you get your commission. Because like when I get my commission, what I do is I take 20% off the top of it and I send it to the government. This way here, you don't get caught up at the end of the year by getting a tax bill and you already spent the money. So that's the way I do it. But this FICA, Chris can explain it better when she's online. But you have to pay, I believe it's 15.5% of your taxes, and that's pre write-offs. So therefore, like if you pay 15.5%, say years ago, it used to be up to $90,000. So that's 13,000 and change that you have to pay taxes. And so if you had a $50,000 write-off, on that 90 you made, you still have to pay that 13,000 in taxes. And that's what's nice about the S Corp. You can circumvent that, but she'll explain it more in detail. Are you on yet, Chris?
No, it won't let me in.
It won't let her in.
The link everyone else used. I don't know.
It's the same link everyone else used, Chris. Well, I'll tell you what, Chris, if you can't get in, I've got my phone on speaker right here. You'll just have to communicate that way.
Okay.
Okay.
All right, well, I'm gonna just get started with this and maybe she can, continue to try and get in. But so I just have just a short little PowerPoint here just to kind of get our minds wrapped around this because it's a little more than just, tax planning. So I kind of wanted to get it going around, kind of our whole financial situation as real estate agents. So I just, one of the toughest aspects of being a real estate agent is managing your time. So, what we don't want is to get wrapped up in prospecting and showing and the contracts and forget about, just simply putting money aside for taxes or keeping receipts or keeping mileage and things like that. So, the financial side should be a big part, and I think it is for the most part, but some new agents, it might not be top of mind to sort of think about, January 1 after a year, if you make 10 grand or if you make 100 grand, it can hit you hard if you haven't really been thinking about it throughout the year. So definitely want to, kind of, think about that as we go this morning. So, I just want to discuss goal setting and accountability, commission management, financial planning, maybe including retirement. We don't have to get deep in that, but just the thought process. And then of course, tax planning. So I'm going to kind of go through the first three a hair quicker. And then, because we really, we kind of focus this around the tax planning piece. It's obviously a good time to be chatting about that because we're going to be doing our taxes shortly. But as far as the goal setting and accountability, so when we talk about a real estate agent's finances, yeah, we're that in that group that we might get a check this month, we might not, we might get 3 checks, we might get, and then go next month without a check. It just depends on, obviously when we close a deal and then we get paid. So, if anyone's interested in sort of, actual goal setting, it's not too late to do for 2025 for sure. And I do it with, hundreds of agents, probably 100 agents that do it well. And it can be, I want to make 10 grand this year. I want to sell 5 houses. I want to make 100 grand this year. I need just enough money to buy a new car and make my mortgage payment. I want to go on vacation. There's a lot that kind of comes into, how much money do I need to make this year? And if I don't make it, what's going to happen? Well, we don't go on vacation. I don't get the new car. So I have some spreadsheets if anyone's interested. Just let me know. That kind of break it down. It doesn't mean I want to sell 100 homes and make 300 grand. Like, you can set your own little business plan up that says, my average commission is 3 grand or 5 grand, whatever number. This is what I want to do financially. So that means I need to sell 5 homes. And really what it comes down to is, if you want to sell 5 homes, how are you going to do it? Because then it kind of takes it to like, well, if you sold 1 in 2024 and then all of a sudden you want to sell 5, like, how's it going to happen? Because it might not just, happen with, folks magically calling you up and you get 5 deals and it just sort of happened. We need to plan for whatever deals you need. If you need 2 buyers and 3 sellers, where are they going to come from? So that becomes another piece of, the accountability. Like, you need to make phone calls, you need to contact people, you need to do open houses, whatever that entails. So that goal setting is sort of the first chunk of, the planning, the financial planning for the year. And I'm going to go through this, and then hope Chris is going to add some stuff, and we'll have hopefully have some time to to take questions, see, get some input from everyone else as well. Commission management, I just kind of threw it in there to, especially with newer agents, maybe you go a little bit and, it's the idea of getting a $5,000 check. Like you get a $5,000 check and you're like, oh my gosh, and you need to be smart with it. You need to plan with it. You need to know like, hey, when's my next one coming? Because if I get that $5,000 check and I don't have a deal under contract, I mean, you could be 6 weeks out easy and that's if something happened today. So, get the check and plan, what do you need to put aside for taxes? If it's gone in 2 weeks and then you got another month or more before that next one comes in, it's just a matter of being conscious when we do get these checks that seem big at the time. Just paying attention to, hey, when's the next one going to come? So to definitely think about that as you are going through the year. And again, especially for the newer agents, it might take you a little bit to get familiar with the process and not get too excited when you get a check like that, because you need to plan with it. But definitely think about that. Financial planning, just again, kind of a quicker one, but we have the ability to, or we have to, but we have the ability to, put money into a 401k. We can do like Roth IRAs and IRAs of different kinds. So, definitely think, obviously if you're, new or whatever's happening, if you're just paying bills, focus on that. But, an extra $500 here, an extra $500 here, or if you set aside, $200 a month or whatever you do, and put it into, some sort of retirement plan, we can do that. We set those up ourselves through, whatever platform. But I'm sure there's some folks on the call that have places they love. So, we could definitely talk to each other and see, who likes what, company that might be with. Maybe it's local, maybe it's just a, online Fidelity or something like that. But just be aware, we're responsible for our retirement. We're not putting $100 into a 401k every check, and we don't have a retirement when we, work for 20 years. We're doing it ourselves at this point. So definitely just remember that we're responsible for that. And then the tax planning. So this is, kind of where we can bring in Chris. This is just a big one. This is a big one for us because, quite frankly, we have the ability to write off things that if you went to work 9 to 5, you can't. If I go to work 9 to 5 and get a paycheck and have that 401k that I put $100 a check in or whatever, I can't write my mileage off when I drive to work and back. I can't write off a dinner with a client. You know what I mean? So this is kind of it's much bigger than, just a, sort of an individual, hey, I made $30,000 last year. Well, if you didn't pay anything or set anything aside, well, guess what? We'll have some deductions, but January 1 comes tax time for that, all of that 30 grand, all of that 100 grand, whatever you made, and if, we didn't have $100 pulled out each check and sent to the government, and then we get a W-2 that says, hey, you had $3,000 withheld. We didn't. So, that's the idea of planning, and planning starts in January. Well, really in December, but we're in January now or February now. So we're gonna just talk now, like what can we do, first of all, to reduce our income as much as we can, but also be very aware of an S Corp, an LLC, keeping receipts, keeping mileage, and things like that. So that's kind of what we'll kind of focus the rest of the call on. But please, if everyone will just kind of, if we can just kind of talk one at a time, first of all, but, just if you unmute yourself and someone's talking, just wait, kind of wait a second and let them chat. But I'm going to pause for a minute and just see if anybody has anything kind of initially, and then let's start talking about the tax planning piece. And then we at any point, feel free to, talk about any of the other three as we're going as well. So I'm going to just open it up and see if anybody has anything.
Yeah, Wayne, I just looked up while you were talking. Chris, correct me if I'm wrong, but the cap, if you start an S Corp, which I, did years ago, you're basically circumventing the FICA, which is a social security. But if you've paid in for so many years, you're still gonna get social security. But, the cap is 176,000. And so let's say you earn 176,000. If you don't have an S corp, the government, you pay 15.3% tax rate on that, which comes out to $26,928. So and let's say you have $60,000 in write-offs on that 176, the 15.3% comes off before the write-offs. So you still got to pay that, and that's what ends up hurting, because you think, oh well, I got these write-offs, and you can't. The FICA circumvents write-offs. That's one of the reasons I started an S corp years ago, and Chris handles it for me. But then to file an S corp, I can't remember what it is. And Chris, it's like what, $400 a year or something to that effect. So you see, to spend that little money to do it, it's well worth it. But and then if you bring it down to, like, say 15,000, say you sold $1 million and you're at $15,000, that's still $2,295 that you got to pay, no matter what write-offs you have. So you'd be better off starting that. That'd be my suggestion.
The only thing that I'm going to add to that is there have been some changes that have occurred since December. The IRS has now instituted a special division, which is now auditing S corps and LLCs. So the one big thing in this is, if you do start an S corp, one of the rules of an S corp is paying the shareholder reasonable compensation. So yes, what Richard's saying is true, but you do have to give yourself a paycheck. So your payroll will be involved. The other side to this is you can also use your S corp as a vehicle towards financial planning for retirement, because there's ways of using your payroll to fund retirement.
All right. So
Chris, go ahead, Randy.
yeah, no, yeah, just to kind of, sort of reiterate that the S corp is it may, the idea is do a little research. Is it for you or isn't it? It's not necessarily just, for everyone, but if it's for you, the idea is that, a CPA and accountant can help you set it up. And then you would have to have sort of, an accountant do your taxes. It's not necessarily you do them yourself, like maybe you do now. The S corp's a little bit more detailed, so you hire a CPA to do that. But again, what's your goal? What are you gonna make? Do you want to make more? It's not just, hey, my goal's 50 grand. Well, if you make 100 grand, it obviously could be a big difference in your tax liability. So do the research, talk to folks, talk to Christine, talk to Richard, talk to other folks that have one, and just sort of know is this right for me or isn't it, first of all. So that but it can just there are different avenues to besides we'll talk in a minute just about reducing your tax liability if you just file a Schedule C, which a lot of folks do in a minute. But just the idea of that S corp or even an LLC, things like that have ways of being better for taxes. You just really just need to understand it and sort of think about it if it's right for you or not.
Were you saying something, Jim?
No, I just finally got in. Yeah. I was just shocked it let me in finally.
Oh,
That's weird. It must have had a little glitch or something.
Yeah.
so
Yeah, go ahead, Richard.
no, I was just gonna say one of the hardest things to do, and it took me a number of years to do it, and what made me do it was I got smacked with a big tax bill at the end of the year, And then you think you have a little savings and all of a sudden, boom, there it goes to the IRS. So the best thing to do this way here, you're in touch with what you got all year long. I go online and I take, if I get $1,000 check, I take 20% of it, 200. I send 3/4 of it to the IRS and the other quarter to the state. And then at the end of the year, and I've been doing that for probably the last 3 years, and it's not so hard at the end of the year. Believe it or not, last year I got a couple dollars back, which was really surprising. It feels good because then you go, geez, I didn't get slaughtered. And you're still paying the same taxes, but a little at a time feels a lot better than one big bill that you got to wipe out part of your savings for. So I just want to let everybody know that's the easiest way to do it that I've found.
The other thing to that is, the IRS is really amping up on sending letters to people that don't make estimated payments, to where they are charging you, penalties and interest for not making those estimated payments on time. If you owe over $1,000 in a year to the IRS, they want their money. We're a pay-as-you-go society. So when you make your money, you're supposed to pay them.
Yeah, that's a good point, because it's, it might not be top of mind to actually, even if you pull it out, I know a lot of folks that get the check and put 200 aside, and it's just, it's like in a separate account or in their account, and they kind of try to forget it, but it's like actually making that payment, on the, as a quarterly, estimate, is the key to avoid, just like Christine said, avoid, that payment. Because, it wouldn't take much, honestly. Like, even if it was just me and I made, 30 grand just by selling 1 million, I can only deduct so much. So I'm gonna have, let's say 15,000 left. Well, that's a, that's a $3,000-4,000 bill just like that, like Richard said. Or so paying a thought, even if you just want to get close, or even if you're making the estimated payments and then you have an unbelievable fourth quarter, and just you could sell $1 million in one quarter. Well, they will see that you've made the payments, and and you were kind of on track. But but if you're at the end of the year and like Christine said, over 1,000, realize they're going to ding you, because they're going to say, well, we should have had 3,000, you owe 4,000 now. If we should have had at least 3,000 of that, already. So, you're going to owe some sort of interest on that 3 grand or whatever that number
Right.
is. So they're going to,
Yeah.
and then the audit thing just, they got, that's just something it's probably going to get worse and worse. So, definitely thinking about the audit piece, whether it's a S corp or, just your regular tax return, definitely be aware that's out there and always out there as a possibility.
Make sure you keep your receipts. I'm in the middle of an audit for a client right now, and they didn't have good record keeping, and they didn't keep the receipts. The IRS agent is looking for receipts. Keep everything.
Chris, can you tell everybody what it would cost to incorporate as a LLC, between registering with the state and fees, just so they have an idea?
You mean an S corp?
Yeah, just like you're doing. Yeah.
So just fees to New York State are around $480. And then, of course, there's other fees involved, because we have to then buy you a book, which is an additional $100. So I'm charging $775 to establish S corporations.
And
That
that
gets
includes
you-
everything.
That gets you your EIN, that gets you your book, that's all the filing fees with the state, everything.
The only other thing you would have to do is start a checking account in your
Correct.
S Corp's name. Because when Chris writes the check, like she writes mine to Richard J. Benedetto Enterprise, and I deposit it in my account, it doesn't go into my personal account because then it would be subject to FICA. So you definitely have to deposit it in your, and then you disperse it however you want. You pay your bills, whatever you want to do from there. Correct, Chris?
Yeah. So that, Christine just said like, 775, she can, again, this is just for you guys to think about. Doesn't mean you have to go running out and start an S Corp. I mean, it has to be right for you. You have to decide if it's right, but 775, you're set up. According to Chris, you will be now doing payroll. Your tax return will cost a few dollars more to do than just a, regular tax return with a Schedule C. So again, just things to think about. But if you're in this, for the long haul, if you want to make, a few bucks, strongly think about doing that S Corp, as a long-term, tax, advantage for you. And if you're thinking about doing it, I always say, as long as you realize you're going to, if you like, yeah, I want to do it, but I'm going to wait till next year. Now, you could file an S Corp, I believe, Chris, if you, like December 30th, and it would be available, sort of available for the year. So,
Yeah,
if
there's
you
ways
decide it's good for you,
of
do it.
running things through if you didn't do it until December 31st, I mean, there is ways of doing it and then establishing payroll in the next year. It just makes the sooner the better if that is the way you want to go. It just makes everything easier.
So I got a question for you, Chris. So you can can you set up an S Corp and just have it sit there and not put anything in it? Like if, part of this year, set it up in July, but I really don't want to put anything into it. So I end up until January 1st next year. And so do you still have to do a payroll through it if it's not accepting any income?
If it's not accepting any income, no, you don't have to establish payroll, but you will have to file an 1120S for that year.
Mm-hmm.
So let's just say we establish one now. You don't do anything with it, but it's established, right?
Right.
Come 2026, we still have to do, it would be an all zero return, you still have to submit that tax return.
Right. Yeah, you're not just doing your personal taxes. That's now a separate total entity.
Right. It's considered a pass-through entity. So you have to do the 1120S. So you have to do your S corporation return, which those are actually due before personal returns. They're actually due on March 15th. So that return has to be done first. From there, you get what's called a K1, which is similar to a W-2. And that information goes onto your personal tax return, and that is where you're taxed.
Right. Mm-hmm. Yeah.
Yeah. Before we kind of because whether it's an S Corp or you're doing, an LLC or just a Schedule C where, you're just kind of self-employed, they all involve, we still want to reduce our income as much as we can. So we're going to talk about that in a minute. But before we kind of get into, hey, what can I deduct and things we can deduct and obviously keeping receipts, does anyone like S Corp is, we talked about it, if it was the first time I heard that, and maybe it is for some, I'd be like, wow, that was a lot. It could go over your head. So, I'm going to just pause. Anybody have any questions that you want to ask now, or any thoughts on that? But certainly, like I said before, if you think about it for a few days and then come back to us, go, stop in the office, see Chris or Richard or whoever, or talk to someone if you just know a CPA, you certainly can do that. But I'm going to just pause now and just see if anybody has, anything right now that, that they want to talk about from anything we've talked about, but really the S Corp.
Nope, looks like everybody knows everything.
All right, good. Or, or like I said, think about it and, decompress that for a little bit and then, and then come back by all means. So,
Yeah, Chris, if you want to just go over a few other things like what else can write off? Like when you buy a gift, what's the limit on gifts that you do? Because I buy every time I have a closing, I get a little small something, a gift card, stuff like that, what you can write off, and other ways of tax saving tips, Chris.
I mean, here's the issue. You can write off most anything as long as you're not audited. You know, you have to use some reasonable sense when doing things. You know,
I'm talking.
you
Yeah, I'm
can't
talking legitimate
always
write-off.
write off your car. I mean, you write off a portion of your car. You can't always write off the whole car because you may use that car for personal use. So, I mean, really getting in, it comes down to making sure you're saving your receipts, keeping your receipts in order. Whether it's monthly or by category, your receipts, your friend. And when it comes to any audit, I mean, that's all subjective. It's up to what the auditors feel are valid or invalid. So, I mean, there's really no limit on, things that you purchase or anything like that. The only thing where limitations come into play is like on depreciation. If you're depreciating off a vehicle, home office expenses get a little hairy at times. They're a big audit flag. So watching what you do with a home office and putting home office information on, just keep that in mind that, that raises a flag when you do, even on the Schedule C. That's something that the IRS looks at. I'm not saying not to write that stuff off. I'm just saying, you just got to keep in mind and not push the envelope. And a good tax preparer and a good tax planner will assist you in making sure that you're not raising those red flags.
yeah, and that's a good point. Like, hey, some folks do their own taxes, it is what it is. If you have someone that you can, talk to and they're like, hey, this is how you can do that, or how you can't do it, or you shouldn't do that, or if you do that, well, you're fine unless they come knocking. Not fine, but if they come knocking, well, you may have an issue or two, or you may have to explain. But just in general, as real estate agents, kind of like Chris said, I mean, I can go buy a $10,000 computer right now and, depreciate it out. Like they can't like, oh, I just chose to buy a $10,000 computer. So, it's not like they, can limit, but really the idea is, of course, having the receipts, but really anything we do to run our business. If I go buy some paper and I print out some listing sheets, well, that's deductible. If I take a client to lunch or, whatever, that's deductible. If I drive my car to the office, from the office to a showing to, back to the office, back home, all that mileage is deductible. So
make sure you're keeping a mileage log.
Correct. I can't just, like I do on January 1, I see what my mileage is. Like, okay, my mileage is 20,000 miles. At the end of the year, okay, it's 30,000. So I drove 10,000 miles. Well, that's not, I don't just write 10,000 on my tax return as, oh, I drove 10,000 miles, because like Chris said earlier, some of that's, I drove to the store and this and that. But, they will ask, what was your, how many miles did you drive this year and how many were for work? So having the, yeah, I say it's a pain. Yeah, sometimes I forget. So I, like I basically know what my mileage is for work and, you know, I can always sort of back it up and say, well, I drove to the office and things like that. But, you know, keeping track of it. There are apps you can buy there, you know, that track where you go and, you know, things like that. So, you know, there are things that can help you, but in general, you know, just keeping the mileage, any receipts you buy, anytime you're, you know, like Richard said, if you're buying a gift, you know, for a client, keep the receipt and, you know, you have a spreadsheet, you can have a box of receipts and figure it out at the end of the year, whatever. But realize there are a lot of things that we can deduct to take our 30,000 down to 25 to 20, you know, whatever, as low as we can get it for what we have, for what receipts we have, what mileage we have. I mean, the mileage is, I think it's 65 cents a mile. So, you know, it's not like it's, you know, this little number. You drive, you know, 1,000 miles, that's, you know, $650 off your 30,000 you made. Well, we drive 10,000 miles. Well, that's 6,500 off, you know, that 30,000 we made. So like, that's a big number to, you know, to think about. So it's not like it's, you know, like,
Right.
it'd be a couple $100 or something, you know. So that's kind of the big one. When we get to our tax returns, it's like, man, I drove a lot, you know. Well, that's great when it comes to, you know, tax time because we get a nice little deduction for it.
One other thing too, and Chris, you correct me if I'm wrong, but I know when Trump implemented it in his first time as president, he said you could deduct, if there was no more depreciation. You could deduct a piece of equipment you buy for the office or whatever. You could deduct it 100%. So for those of you that you buy a new car this year, you know, like say at the end of the year comes and your accountant, you think you're going to owe a big tax bill and you buy a new car, you deduct the whole thing off, and that would probably pay for a good chunk of your car.
Well, that's only if you're gonna use your car 100% for business and have a secondary car to drive personal.
Right. And that's what I do. I have two cars, so I use my secondary for personal, the other one so you can deduct 100%. I'm just saying, at the end of the year, if it comes and you're looking at your tax bill and Chris or whoever does your taxes tell you what you think you might owe, it might be worth looking at that because, you know, the government you may pay it 10, 20 grand towards your car because you don't have to pay taxes.
Yeah, and that's, you know, the car is one thing, but you know, buying a new computer at the end of the year, but you know, even if it's a smaller piece, buying a new printer, things like that, you know, like spend $1,000 on a computer December 30th, and that like Richard said, that $1,000 can be, you know, deducted all at once. You know, obviously we talk about this, but there's always exceptions, and you can't spend 300,000 in you know, deduct it all. There's limits, but in general, you know, as we're just talking like a computer here, a computer there, you know, that $1,000 can get deducted from your income. Doesn't mean you got the computer free, but your 30 went to 29 just because you bought a computer that you needed or wanted, and you know, you bought it at the right, you know, in that year. So think about that, whether it's a car all the way down to, you know, something like a computer or anything like that we would use, you know, in our business. So, but yeah, so I mean, maybe I should stop the recording for this. But
And
you know,
Richard-
it's just think about, you know, when you buy a bottle of wine, when you buy, you know, when you go to dinner, you know, there's, you know, if you talk real, I always, you know, kind of always told like, hey, if you go to dinner and you talk real estate, you know, you kind of can deduct it. So that's a little bit of a stretch, but the idea is we do a lot. We do a lot every day, every week, weekends, whatever you want to consider it, that could be, you know, deductible in our business. So, you know, just keeping the receipts, make a note, dinner with Richard, dinner, you know, whatever on the receipt, whatever you can do to sort of justify, you know, 2 years from now, if you get audited and have a dinner receipt for, you know, whatever restaurant, you know, like, oh gosh, I don't, you know, like they're not going to like it as much if you just say, well, I took a client. But if the receipt literally has, you know, dinner with Richard, you know, 123 Main Street, or as much info as you can put on it, you know, it'd be more beneficial at that point. You know, again, if we need them.
Anybody have any questions?
Well, you asked Richard about a limit on like closing gifts. I don't think the IRS or the state taxation department has a limit on that, but I think the Department of State, as far as who governs our licensing for real estate, I think they had a limit, or they used to. I don't know if it's changed any, but it was very low.
I think the closing gift is $25.
Okay, so it's even lower than I thought.
Yeah, I think that's the limit. It may have changed, but I mean, there is a, I mean, if you go spend $200, you spent 200, you can put it on your tax return, if you get audited and they come knocking.
Well, I don't think the IRS or the state taxation, I don't think they're going to care. And it's the other legal branch, the Department of State. Who knows if they ever check up on anything? I doubt it.
Yeah. I mean, I think the IRS would be aware, like if if you put if you put $5,000 in closing gifts because you literally bought $200, it may trigger them to go, whoa, like, and then they're going to want to see the receipts, and so it may not be. It may not be it's going to be it could be a trigger to them. Maybe it might not be like illegal and you might not owe, but they're likely going to, if they're in the audit process, look at that number and go, all right, explain that one to me. And again, you just might have to, you might have to do some explaining. And that's really the key is, like Chris said in the very beginning, you put whatever you want on your tax return. I mean, it's your responsibility, your numbers. Like if I walk into an accountant or a CPA or H&R Block and throw them numbers, like they're not sitting there going, well, I need the receipts for, this 3,000 and I need the mileage log. They're not doing it. But, it is the fact that if someone, I say if someone, the IRS or, state or whatever come knocking, that's when we're going to have to provide the mileage log and show the receipts and all the way down the line. So
one way to get around that low cost, that they allow, it's $25 or whatever, which is ridiculous. But one way to get around it, like that Cutlow Cutlery, that the guy that was in here a few years ago, I bought a bunch of spreaders, and they have a lifetime warranty. They're roughly $100 a piece. And on the blade, it has my name with logo, and it says, Richard Benedetto, broker. Then it says spread the word. It's plain on because it's a sandwich or a spreader for mayonnaise, whatever. So anyways, you could, and what I do with that when I buy them and I give them as a gift, I write it off as advertising because my name's on there. So you could do something to that effect. And you're advertising, you're killing two birds with one stone, and you're getting a bigger write-off.
yeah, for sure. Office, just a few things, office expense, marketing, the business cards, if you do a mailing, if you, buy calendars, if you, certainly all of that stuff, and anything you buy, a pen, pens or anything you buy with, Real Estate Advantage, anything related to that certainly is marketing, advertising along those lines. Whatever you need to work at home. So Chris kind of mentioned the home office. So a lot of us obviously have home offices and work from home. So you can choose to kind of file a section of your tax return that says you have a home office, and there's a couple ways to do it: actual expenses, or they just kind of give you a formula and you get some credit for it. You can do that. But in reality, if you buy pens, if you buy printer, printer, ink, paper, whatever you're doing, like, yeah, if you buy a ream of paper, like, okay, that's my work one, and that, I don't break it down that much, just to be honest, but I kind of keep those receipts and go, well, I needed paper for my work, and I print out this and these and that, so, office expense, marketing, advertising, certainly all of our board dues and MLS dues and the lockbox fees and anything like that, all of that's deductible, so. So again, just stop and think. And if this is kind of new to you, or if you're kind of thinking now like, oh, gee, what did I buy last year? That maybe I could, still deduct. I kind of gotten to this point, stop. Don't be afraid to talk to one of us and say, well, I bought this, I bought that, could I deduct it? Let's just, get it as low as we can with what receipts we have and the mileage we have. But don't underestimate, if you have a receipt and it was business, I know some folks that'll be like, well, that's a little too much. Like, no, you bought it for business. So, so deduct it. Or you drove that many miles. Like, I know it looks like if you drove 10,000 miles and get the $6,500 credit, but if you drove 10,000 miles for work, you drove 10,000 miles for work. Don't be shy with taking what we deserve and what's right to us for the job we have, I guess. So think about that as you're, working on 2024, because it's too late to spend money for 2024, but it's not too late to analyze what we spent. Bank statements, credit cards, things like that. It's not too late to kind of go back and analyze and pull receipts and things for money we did spend.
Well, I think we pretty much covered all the topics on this tax saving, Wayne. It just, the biggest thing I think that come out of this is invest a little money, whether it's Chris or whoever does your bookkeeping, into yourself and get that S Corp, and you'll save a lot of money. That's the big number one. So unless anybody has any questions, I mean,
Another thing that some people might not think about, if you're fully self-employed and you don't have like a health savings account from your spouse's work or something like that, you can actually set up your own health savings account, like Jamestown Savings Bank Northwest. You can go there and set one up, and you can load money. You could put money into the HSA that will be deductible, and then use that money towards any doctor's bills that you've got and stuff like that. A lot of people might not think about that and think that since I'm not employed someplace and I don't have that opportunity, but you do. You could set up your own HSA and take advantage.
that's a good point, Paul. And Chris, when I started mine, it was like the limit was like $3,500 a year. What is that now?
I know it's 8350 family. Hold on, I'll get you. Now you do have to have, the other side of that though, is you do have to have a high deductible insurance plan to have the HSA.
Well, I had the $5,000 deductible.
Yeah. So it's 43 for 2025, it's 4,300 individually or 8,550 for family.
Nice. Yeah,
Okay.
just again, lots of ways to just, save a few bucks here. And we've talked all about, tax planning and deductible and deducting this, deducting that. But, just another way to save money is just a little side note here, is just to think about what you're spending. A lot of us, like, oh, $20, $20, and it's like, just it doesn't hurt to stop and think about, obviously we have to, pay the board dues in the MLS, and we have to, we got things we have to pay, but, stop and think, like, do I need to spend this 20 or this 100 or this 150? Sometimes we can, like, we can sell more, make more, we can cut, do taxes and be more, smart and end up making more, but we can also just stop and think about, our spending and habits and things to, and that obviously, spend less and you make more. So just kind of wanted to talk about that is just a side note.
Other thing too, with the HSA and retirement plans, like for, if you were to just do a traditional Roth, if you're over 55 with an HSA, you can add an extra $1,000 of that. And then if you're over 50 with IRAs, you can add an extra 1,000.
Nice.
So you
So
can
those-
do 4,300 on the HSA but there's got to be a max on what you can build up in there, isn't there, over the years?
No,
Oh,
No.
okay.
No, actually,
It has to be used
actually,
just for medical.
some
right?
HSAs will also give you an investment option on it. As
Okay.
long as you can keep your HSA going, as long as you save your receipts. So let's just say you have a doctor bill that you paid $25 for. You save that receipt. You never took the money out of your HSA, but save that receipt. Down the road, you can then pull that money out after an accumulative amount. You
Okay.
have the receipts to prove that, hey, I paid this with my personal money. I am now taking money out to cover those bills that I personally did. That is not a taxable event. Now, if you just use you're out and about and you forgot your debit card, but you use your HSA card to buy something,
Yeah, that's a no-no.
that's yes. Then that becomes a taxable event. But I mean, I've seen people that use their HSA as another retirement tool, and they let it just grow and grow and grow, and then they retire, and that money's sitting there. They can then use it if they wanted to cover, like, let's just say at 67 they retire, they can use it to cover their supplement, or they just take out what they've paid in previous doctor bills or prescription bills. You can and go on vacation with it. I've seen that done as well. As long as you have the substantial receipts to prove that you didn't use that HSA to pay that bill, you can down the road use that money for it.
Hey, look, we could probably get a doctor to tell us that we need a trip to Florida. So I'm like, yeah, you got to go to Florida. So
Yep.
awesome. Well, thank you, everyone. Hopefully it was helpful. Again, get our minds going. We're available. If it triggers anything, an hour from now or a couple days, or when you go to do your taxes, don't hesitate to reach out. Ask some questions. If you're interested in the S Corp, certainly talk to someone or Chris, and see if she's available or interested, able to help, or answer any questions. But hopefully it was helpful enough to trigger us. Hey, look, let's save a few bucks, by money we spent for our business anyway. Let's just make sure we're, taking care of ourselves as much as we can. So, but thank everyone for joining. Just so you know, our next session, I think I have it as Turbo Leads, but I actually have Kristen Lee Yaw, a real estate attorney in town. She's going to actually join us and talk about the contract, talk about just the attorney part in general. So that's 2 weeks from today. I think it's the 25th. But whatever that next one is, later this month, 2 weeks from now, is Kristen Lee Yaw joining us for just kind of an attorney chat. So kind of think about that, and of course, bring any questions or anything you have, if you've always wondered something about what they do to help us. So, but otherwise,
All right.
thank you guys. And thank you, Chris, for joining. Appreciate all your insight, and take care, everyone.
Okay, see you guys later.
See ya.